Hello everyone, Mike Arnold here, co-founder of Path Trading Partners along with Bob. I achieved another subscriber request. Sorry, I was talking too fast, even for me. By the way, if you're new here, please consider subscribing, ringing the bell, liking, disliking the video, leaving a comment or 5. Longer-term members, please consider a buy me a coffee or a Patreon donation, especially if I do a video for you, but it is not required. Again, this information is free for everybody to help you become better traders and investors. Zoom, bang, zoom to the moon. Sell-off continues. Now we're getting divergences down here. I have the double top, which hit all its levels. Yeah, I mean, it hit them on. It triggered, retested the breakdown area, and then gapped down on its earnings back on the 30th of August. And now just drifting lower, but we're getting higher highs in the RSIs. That rhymed. Higher highs in the RSIs. Lower lows in the price action. So it looks like we're running out of momentum. We just broke some critical support back from this little gap down on the 11th of May and correction, which put in a pretty decent bottom against here. Let me just point something out. So again, this concept back from the end, I hope everybody can see over here where I'm pointing. This was resistance, retested in this area, becoming support. And then don't ignore this stuff, because retests again becoming support, which gave it a major bounce. Now we broke that. So this is now resistance, but we are coming out of oversold just barely with divergences. So I would not be surprised to at least see some kind of rally, especially again, this one will trade with momentum. So if we start getting a momentum stock rally, which we've had some pretty substantial sell-offs, would not ignore that. First little minor resistance is about 279. So besides this gap open, your major candle bodies, now start watching candle bodies up here. Your major candle body resistance is about 289.50 to 290. And the top of the daily rotation zone is 294. So 290 to 294 is your key resistance longer term area. Above there, let's check in on that weekly. Weekly is all the way up. Weekly is sort of key up around 300, 301. Keep an eye, if we continue to rally, keep an eye on that. Because if you get a close above about 301, I would start watching at least for a partial gap fill. Remember, it left behind this gap between the 30th of August and the 31st with the earnings. And I would watch for a partial gap fill. A good little area is to do about a 50% level off that one. Then the next area would be around 332, and then watching for the full gap fill. When I say, watch for about a 50%, you can put up your, I use harmonics. I do it from that close right before. This is roughly, so you're watching around 318. So that 318 level, but that's only if we get that close above 301, because you have a substantial resistance in the way before that. So now keep in mind, just as when we're going up, there are two kinds of corrections. There's the sideways and there is the retracement. It can burn off this oversold condition by continuing. I mean, even if it rallies up to this 280 level, it can still, that would be a sideways correction for me. It would really, in order to get a retracement correction, we'd have to really start getting up around the 290, 291 area. Then that we'd have a retracement correction. But keep in mind, you're against the daily and weekly rotation zones, so it is still in bearish mode with a slight neutral to short-term bias due to the divergences. We'll talk to everyone later. Bye for now.